You know, when you look at the retail world right now, it can feel a little grim. Store closures, tough markets, but one company is not only bucking that trend, they're doing something pretty wild. Today, we're going to dig into the surprising story of Zumiez and how they seem to be cracking the code.
I mean, most companies are just trying to hold on for dear life, right? They're fighting a shaky economy and consumers who change their minds every 5 minutes. But Zumiez, they're not just surviving, they are absolutely thriving. In fact, they're having one of their best runs in years.
So you gotta ask, what's their secret? How are they pulling this off when so many others are struggling? Well, that's what we're here to figure out. Let's get into it.
Okay, first things first, let's look at the numbers. Because the figures that came out of Zumiez's third quarter are what's really making Wall Street's ears perk up. This wasn't just a good quarter, it was a knockout.
So what's the big number everyone's buzzing about? 55 cents. That's their earnings per share. And to really get why that's such a big deal, you have to look at what they were supposed to make.
Get this, the company's own guidance, what they told investors to expect, was just 29 cents a share. They didn't just beat that estimate, they came close to doubling it. That, my friends, is what you call a blowout quarter. It's the kind of thing that makes everyone sit up and take notice.
And hey, this wasn't some financial magic trick. The top-line sales were super strong too. Net sales shot up 7.5% compared to last year, climbing from about $222 million to over $239 million. In this retail climate, that's some really solid, healthy growth.
So where did all that extra cash come from? Well, their gross profit jumped by almost 15%, and it was really a masterclass in running a tight ship. They got more out of their store costs, they made more money on the products they sold, and they cut way down on lost or stolen inventory. It was just a perfect combination.
All right, the numbers are impressive, for sure. But the real story, the interesting part, is how they pulled it off. So let's crack open their playbook and see what's going on behind the scenes. If you boil it all down, their game plan is actually pretty straightforward, but it's incredibly effective. 1. Grow your revenue. 2. Squeeze every bit of profit out of those sales. And 3. Use that money to get even bigger. Simple, right? But it's all about the execution.
Now, a huge piece of this puzzle? It's their own in-house brand. You heard it right from the CEO, their private labels are a massive success story. These aren't just more profitable, they give Zumiez complete control. They can dictate the trends instead of just following them. It's a huge strategic advantage.
And if you look at where this is all happening, North America is just an absolute powerhouse for them. Comparable sales, that's sales at stores open at least a year, were up a jaw-dropping 10%. This is their 7th quarter in a row of growth here. And it's all being fueled by bringing in fresh new brands and a smart pricing strategy that's really working.
Okay, so a fantastic quarter is one thing, but the big question is always, can you keep it up? Well, if you look at what the company is saying about the future, it seems they're feeling pretty confident. Actually, more than confident. They're raising the bar.
For the 4th quarter, you know, the huge holiday season, they've upped their forecast quite a bit. They're still expecting solid sales growth, and they think they're going to deliver earnings of right around $1 per share. That would be a massive leap from the previous year.
And here's where you can really see the whole story come together. Last year, in 2024, the company actually lost a little bit of money over the full year. For 2025, they're on track for a solid profit. That is a gigantic turnaround in just 1 year's time. So management is clearly feeling good, but what's the view from the outside? What's Wall Street thinking? Let's get a quick reality check from the market.
Well, if you look at the stock's chart, the technical signals are, for the most part, pretty bullish. A lot of the key indicators are pointing up, which tells traders that the stock is in a pretty healthy trend.
Now, traders have their eyes on a few important price levels. There's a really strong floor, a support level, down around $22.70. As long as the price stays above that, the bulls are happy. On the flip side, the next big test, the ceiling they need to break through, is that resistance level around $28.
But it's not all sunshine and rainbows. You knew there had to be a but, right? There are definitely a few clouds on the horizon that suggest a little bit of caution is probably a good idea. First off, some of those technical charts are flashing an overbought signal. That can sometimes mean the stock has gone up too far, too fast, and might need to take a breather. And then, of course, you have the big picture risks. The overall economy is still unpredictable, their international business is a work in progress, and things like tariffs are always a potential headache.
So we've looked at the awesome results, the smart strategy, and the view from the market. Let's put it all together. What is the final takeaway here? What's the bottom line?
I think it really just boils down to this. Zumiez has put together a brilliant game plan, especially in North America. Their focus on unique brands and private labels has paid off in a huge way. But at the end of the day, they're still swimming in the same choppy global ocean as every other retailer. And that leaves us with the one big, critical question. The momentum is clearly there. Zumiez has built a powerful engine. But is that engine strong enough to power through the potential storm of a global slowdown? That's what we'll all be watching.